The upcycle in real estate continues unabated, and an interesting report from ANAROCK points out how prices seem to have also caught up and boosted. Now, the question is that with prices going up, and this report says that in the MMR region and the NCR region, you have nearly 50% jump in prices in residential real estate in the last 5 years. Now, the question is that putting off or dampening spirits of buyers, or is it still going very strong? To get a clear picture of what's happening in the real estate industry at a time when all the stocks are in focus, I'm joined by Anuj Puri of ANAROCK. Anuj, great to speak with you as always and have you on NDTV Profit. Let's begin with sort of the key takeaways or the pointers of your report, which is very interesting. So this 50% jump in NCR and MMR, has the bulk of it come in the last couple of years where we've really seen the upcycle?
First of all, Tamanna, always a pleasure to be on your show, and it's very nice to interact with you. Thank you for having me. There is a huge amount of positive momentum that continues within the real estate. So I'll give you a little bit of background before we get on to the prices, so that your viewers can appreciate why these prices are rising. The first is that on the sales side, every year we've seen the best ever and more records are being broken. Q1 of this financial year, April to June 2024, again, we have seen is the best ever quarter, which has shown on a very large base compared to last April to June of 2023, growth of 5%. Second is we're seeing that the unsold inventory is coming down rapidly across the board. Third, we're starting to see price rise happen, and in the last 24 months, absolutely correct, a lot more because a lot of the inventory is getting completed. And as this inventory is getting completed, the prices are going up by the developers because there's financial closure on all these inventories, and this is perhaps just the profit of the developer left in there. I must put an asterisk on this and say is, in the years from 2012 to really 2019 pre-COVID, the price rise hadn't really happened. So 7 years before COVID, the price rise hadn't really happened. The price rise that we are now seeing in the last 5 years is literally a catch-up that is happening for the period from 2012 to 19 when price rise didn't happen. So whilst, yes, 50% prices have gone up in NCR and in MMR over the last 5 years, but actually you should look at it more from 2012 to 2024, and then one will appreciate that the price hasn't really gone up, given that the income levels have gone up much faster than the real estate prices.
Yeah, no, so that's a good point, Anuj, because I was speaking today with a real estate company who made a similar point that if you look at it, at least NCR, over the last decade, then prices have just pretty much been at inflationary levels. So now that the catch-up has happened, and as you describe it, it's a price catch-up. How much more is the question? Because demand seems to be there, especially in certain segments. I wouldn't say so much in affordable housing. The input cost component continues to increase as well. Do you see a trajectory of price rises, at least in residential real estate, continuing?
I do see that, Tamanna, that the price rise will happen, but it will be in line with the inflation. I don't think this is yet a game for investors or speculators to come in and say, we're going to make a ton of money with the price rise that is going to happen. I think it will be more in the range of 5 to 7% that you will see. And that will be largely because of your input cost that the developer is going to pass it on to the home buyer, to the consumer. And that is how I feel across the board, you will see across the cities as well, a 5 to 7% rise in the price over the next 12 months. Having said this, Tamanna, there will be some projects where, as I had earlier said, is that the financial closure has happened through the sales. What it means is that maybe 50–60% of the project has been sold, and the balance, 40% is the pure profit of the developer. So even if the project sales slow down, it doesn't matter to the developer. They may maximize by increasing the price. But until such time that the financial closure through the sales doesn't happen, majority of the developers will be focused on the sales velocity and not necessarily increasing the prices and breaking the cycle.
So talking about that sales velocity factor, because that's the other side of the coin, isn't it, Anuj? And I was going through your report, while prices have increased, so has unsold inventory, and the most in NCR region. Now we're seeing the pace of new launches is it's frenetic, for lack of a better word, and there are more and more in the pipeline, expanding even beyond these two key markets that we've been talking about. Do you see that as a concern going forward as the unsold inventory builds up?
Not as much, Tamanna. There is a fair amount of appetite for the unsold inventory to really go up. We are at a 14-month low. Pre-COVID, we were between 22 to 26 months. We are at a 14-month. If anything, I actually do want the unsold inventory to go up, because that then keeps the harmony between demand and supply. If the unsold inventory, starts to go below 14 months, then the market really tilts towards the developers. And that is when you can start to see a lot of increase in the prices, because then really, supply is much more limited compared to the demand. So I do hope that there is more inventory that comes up, and perhaps the supply is more than the demand, so that the unsold inventory, usually I've found over the last couple of decades that between 18 to 20 months is the right equilibrium, where the demand and supply really, the curve meets and you don't see too much of price rise happen. So that's what my take is. Within that as well, Tamanna, I would say some of the markets, are really starved for the inventory. Some of the markets we are seeing a bit of an oversupply from the 14-month being built up. But I would say it's not a matter of huge concern that we are starting to see too much of overhang of unsold inventory.
Yeah, but speaking specifically about NCR, because that's in focus and a lot of launches there as well. There you're seeing an inventory buildup of 28 months.
So it is, but Tamanna, over a period of time, we've seen much of what is written on the paper actually doesn't come up within the timelines that has been indicated. So it does evenly support it, and does bring it down over a period of time. So 28 months, I would say, will be more like 20, 21 months by the time this actual inventory starts to come physically in the market for its sale. So I would put in a bit of a sort of a caveat to that, is to say is, on paper you may start to see in that city an oversupply situation, but in actual practice, by the time that supply will come in, it does get delayed, and by that time the demand catches up.
Okay, just want to get your sense of what the picture is like beyond NCR and beyond MMR, because another very interesting market which has been dynamic is Bangalore, right? Your south markets
Yes.
are also growing immensely. And what is the picture there in terms of both price rises and unsold inventory?
Bangalore has been a very stable market right throughout, not only, post-COVID, but even before COVID. It is a very solid, stable, very mature market. To an extent, Tamanna, I would put it higher than NCR and MMR as well. The quality of developers, the quality of the product that comes down, the stability of the prices, the employment that gets generated through a lot more cosmopolitan workforce within Bangalore lends itself to a very sort of a stabilized residential sales. So whilst in Bangalore also the price rise has happened, but the price rise is not in terms of sort of rupees as much as what you're seeing in NCR and MMR, where already the prices were high. So as a percentage, when you add on to it, the total value of the product does become that much more expensive. In Bangalore, the prices, still largely range between, I would say, is 8,500 to 12 or 13,000 rupees. a square foot. In a place like MMR, I mean, in that price, you'll probably get in Kalyan, Dombivli, that sort of a thing. Whilst in Bangalore, you will get in a lot more upmarket of very mature developers in 8.5 to sort of 12, 13,000 rupees. What market does in southern India, Tamanna, does concern me a little bit is Hyderabad. Is I do see is on the office side a lot more supply, perhaps to an extent of oversupply that is getting built up in Hyderabad, and equally on the way the land sales are happening for residential. I do feel is that there is a huge amount of capital appreciation in the land, which I don't know ultimately whether the home buyer will be able to absorb that increase in the land price that has been very quickly happening quarter on quarter in the Hyderabad market.